Bitcoin, the revolutionary digital currency that has changed how we think about money, investments, and even technology itself. But here's a question that's on the minds of many crypto enthusiasts and skeptics alike. What happens when all the Bitcoin is mined? Well, there's a hard cap of 21 million coins. What happens after that? Will Bitcoin lose its value entirely? Could it really go to zero? And most importantly, if you're an investor or thinking of becoming one, should you be worried? Stick around because we're diving deep into this hot topic, and trust me, you'll want to hear what's coming. To understand this potential scenario, let's rewind and break down some basics. Bitcoin operates on something called blockchain technology, and every transaction is verified by a decentralized network of miners. Bitcoin mining is the process of adding new transactions to the blockchain, the decentralized ledger that records every Bitcoin transaction. Miners compete to solve complex mathematical puzzles using powerful computers, and the first one to solve the puzzle gets to add a new block of transactions to the blockchain. As a reward, they receive a small amount of Bitcoin, known as the block reward. This process is energy-intensive, requiring significant computational power and specialized equipment. On the trading side, Bitcoin operates 24/7 in a global market, allowing anyone with an internet connection to buy, sell, or hold the cryptocurrency. But here's the catch. As more Bitcoin is mined, the puzzles become harder to solve, and the block reward decreases over time. This is where things get interesting, and where concerns about Bitcoin's long-term future come into play. When Bitcoin launched in 2009, miners received 50 Bitcoins for every block they mined. Every 4 years, this reward is cut in half, a process called the halving. Today, miners earn just 6.25 Bitcoins per block. By design, this halving will continue until the very last Bitcoin is mined, which experts estimate will happen around the year 2140. That's right, over a century from now. But what happens after that? With no more new Bitcoin to reward miners, does the entire system collapse? Some argue that this is where Bitcoin could face its greatest challenge. Without block rewards, miners would have to rely solely on transaction fees to make a profit. But let's be real. Will transaction fees alone be enough to incentivize miners to keep the network secure? If miners stop participating, the network could become vulnerable to attacks, making Bitcoin practically unusable. This is the nightmare scenario that has some experts speculating whether Bitcoin's value could plummet to zero once mining stops. But before we jump to conclusions, let's take a step back and examine why Bitcoin has value in the first place. Unlike traditional currencies, Bitcoin isn't backed by a government or tied to any physical asset like gold. Its value comes from two key factors: scarcity and demand. The 21 million coin limit creates digital scarcity. There will never be more Bitcoin than this. At the same time, Bitcoin's decentralized nature and security make it a trusted store of value for many people around the world. It's often referred to as digital gold for this very reason. So, will these factors disappear when all the coins are mined? Not necessarily. Even when mining stops, Bitcoin's fixed supply ensures its scarcity remains intact. If demand continues to grow, or even hold steady, Bitcoin's value could theoretically remain strong. In fact, some argue that Bitcoin could become even more valuable once all the coins are mined because the supply is completely locked. Think about it. If something is both limited and highly sought after, its value often skyrockets. But let's go back to the miners, because they're the backbone of Bitcoin's network. Will transaction fees alone be enough to keep them engaged? The answer isn't simple. Currently, transaction fees make up only a small portion of miners' revenue. For example, in 2023, transaction fees accounted for just 2 to 3% of their total earnings. The rest came from block rewards. However, as block rewards continue to shrink, transaction fees may need to rise significantly to compensate miners. And here's where things get tricky. Higher transaction fees could make Bitcoin less appealing to everyday users. If sending Bitcoin becomes too expensive, people might turn to other payment methods, reducing Bitcoin's adoption and potentially its value. It's a delicate balance, one that will need to be carefully managed in the years leading up to 2140. But there's another layer to this discussion: Bitcoin's use cases. Today, Bitcoin is used for everything from speculative investments to remittances and even as legal tender in countries like El Salvador. If Bitcoin's adoption continues to grow, its network effects could create a self-sustaining ecosystem even without new coins being mined. Think of it like this: the internet didn't lose value when dial-up modems became obsolete. Similarly, Bitcoin could evolve and thrive even as its mining model changes. Another point to consider is Lightning Network, a Layer 2 solution designed to make Bitcoin transactions faster and cheaper. By enabling off-chain transactions, the Lightning Network could reduce the burden on Bitcoin's main blockchain, lowering transaction fees while maintaining network security. This technology could play a crucial role in ensuring Bitcoin's long-term viability, even after mining stops. Here's another thing: Bitcoin's reputation as a hedge against inflation is growing stronger. In countries facing hyperinflation, like Venezuela or Zimbabwe, Bitcoin offers a stable alternative for preserving wealth. This real-world use case ensures there's always a baseline demand for Bitcoin, which adds another layer of resilience to its value. But what about the skeptics who believe Bitcoin could go to zero? Let's address that head-on. For Bitcoin to lose all its value, two things would need to happen. Demand would have to disappear, and trust in the network would have to collapse. While this isn't impossible, it's highly unlikely. Bitcoin has been around for over a decade, surviving regulatory crackdowns, market crashes, and technological challenges. Its resilience has built a level of trust that few other assets can claim. Moreover, Bitcoin's decentralized nature ensures that no single entity controls its fate. Even if governments impose strict regulations, Bitcoin can continue to operate, thanks to its global network of nodes and users. This level of decentralization is one of Bitcoin's greatest strengths and a key reason why its value is unlikely to ever drop to zero. Now, let's talk about investments, because this is where it gets personal for many of you watching. Should you be worried about Bitcoin's future? The answer depends on your perspective. If you're a long-term investor, the halving process and eventual end of mining shouldn't be cause for alarm. In fact, they're features, not bugs, designed to ensure Bitcoin's scarcity and value over time. However, if you're someone who's looking for quick profits or investing without understanding the risks, you might want to think twice. Bitcoin's price is notoriously volatile, and the road to 2140 will likely be filled with ups and downs. But here's the silver lining: volatility creates opportunity. If you're willing to ride the waves, Bitcoin's long-term potential could still be enormous. So, would Bitcoin's value go to zero when all the coins are mined? It's unlikely. While challenges exist, Bitcoin's scarcity, adoption, and evolving technology make it a resilient and adaptable asset. But as with any investment, the key is to stay informed and make decisions based on your own risk tolerance. If you found this video insightful, hit that like button, subscribe for more deep dives into the world of crypto and finance, and let us know in the comments, what do you think will happen when all the Bitcoin is mined? Thanks for watching, and we'll see you in the next video.